Let's start with the crude prices, which are seeing mild correction today after gaining nearly 2% in the markets yesterday. The hopes that the U.S. lawmakers will reach a deal on the U.S. debt and the reopening of the government will soon refuel the rally in crude prices. Also easing concerns over supply risk in the Middle East is providing support to the prices. On your screens, flat to slight decline coming in, but 111 is holding for the Brent crude prices. The NYMEX also is back at around 102. The gold prices in the meanwhile have fallen below $1,300 per ounce for a second straight day, and the precious metal is on track to mark a weekly loss for a second straight week. Hopes that the U.S. lawmakers will reach a deal on the U.S. budget and the government's borrowing authority has diminished gold's safe haven appeal. On your screens, we have seen some decline continuing though in case of the MCX prices as well. Let's get in then. Vijay Bamwani, who's author and CEO at bsplindia.com. Also joining us is Priyank Upadhyay. He's AVP Commodity Research, SSJ Finance and Securities. Vijay, hi, welcome. Let's start with you first. And what's your sense now coming in for the gold and silver prices? Second straight week of losses. It's trading at a one-week lows. $1,300 an ounce. It's just about meandering around those levels.
Absolutely right, Manisha. And I've been talking about sub 48,000 levels and possibly even sub 46,000 levels, and I think what we are seeing is an overhang of overhead supply on gold and silver both, and this kind of pressure is likely to persist because gold is now trading below 28,800, which was a critical level to watch out for. Silver, I talked about 47,500 odd levels. It's trading below that. So my guess is the fresh levels would be a possibility of sub 28,000 levels on gold, and 46,500 to maybe even 46,200 levels on silver. That's where one needs to take a fresh look, provided volumes, open interest and prices correlate and indicate a buy.
Priyank, how are you approaching the precious metal space and the kind of declines that we have seen in this week? Do you see it continuing in the next week as well? What kind of ranges do you have in mind?
See, looking at the international prices, it's moving in a band of 1275, 1270 zones on international COMEX would act as a strong support in the short term. And on the higher side, the range will fall around 1330. So maybe this range could continue for a while. Overall picture remains slightly on the lower side as rupee has strengthened in the domestic markets and prices have slipped below 29,000, and we could head slightly on the lower side towards 28,200 to 28,000 in short term.
Vijay, how would you look at the energy space? Because we've seen a bit of a rebound coming into that one. On one side, the dollar is still on the stronger side. On the other side, markets are expecting perhaps a short-term agreement coming in from the U.S. Congress on the debt ceiling. In that light, how would you want to look at the prices?
In the absolute near term, there could be a relief rally in the offing, Manisha, but over a period of time, I'm not really very sure about the sustainability of the up move because the bulls are clearly not showing any kind of exuberance or the ability or the willingness to put money down on the table and buy in large numbers. So my guess is the 6360 to maybe 6400 will now act as a fairly stiff resistance should crude prices attempt to go higher. And as I talked about yesterday, the 6200 level is likely to be breached.
Priyank, what's your sense now coming in for this sector, the crude prices as well as natural gas? Would you say that this has perhaps done with its downside? Do you see any support consolidation coming in for this sector?
Yeah, basically, if you see on the NYMEX crude oil prices, it's holding about the 100 psychological level, and 101 is acting as a strong support in short term. We expect a pullback, a dead cat bounce rally towards 104 to 105 in short term. So we suggest traders on domestic markets also to buy around 6200 with a stop loss below 6150, and we can expect a pullback rally towards 6300 to 6350. Talking about natural gas prices have consolidated and has given a fresh move up on the upside. We suggest buying natural gas around 230, 228 ranges with a stop loss below 225, and we expect higher side targets of around 238.
To the base metal space, then, and the markets, of course, are awaiting the Chinese GDP numbers in the next week. Ahead of that, you have seen some support coming into the pockets of most of that base metal prices. Vijay, how are you approaching this sector?
Not very optimistically, Manisha. I think there is still an overhang of supply at higher levels. And unless you see copper trading above 454, 456 odd levels, aluminium trading consistently above the 116 levels odd, I don't see how the bulls are in any position to feel any kind of buying confidence or conviction. So the numbers itself, the ticket sizes per trade, the overall traded volumes, the open interest which is languishing, are not really indicating any kind of exuberance here. So I would not want to attempt to bottom fish. I would let the prices settle, probably let aluminium come to 108, 110 odd levels, copper come down to 430 or sub 430 levels before taking a fresh view.
Priyank, what's your sense on this sector now? Because we have seen a weaker start to the month of October as far as the base metal sector is concerned. Yet another week which is perhaps going down, especially in the international markets there. How would you look at the current levels?
Overall the picture looks slightly bleak for the base metal complex. Nevertheless, in the next week, important numbers from China's GDP data is expected. That will provide a fresh cues in the markets. But overall, copper range, if we talk about, it's 455 to 460 on the higher side, and on the lower side 430 to 435. And this band of 20 rupees will be the range for the next week. Given other base metal complex, zinc and lead. Zinc would act as a strong support around 112, 111 zones, and on the higher side 117, 118 would be the resistance zones. Talking about lead, supports will be coming around 126 to 124 ranges, and on the higher side 130 should act as a stiff resistance.
All right, so that's the view really coming in for the non-agro space. Slightly cautious approach coming in for that, but energy sector is one place which actually has seen a turnaround, and some more buying can be expected into that space there. But with that, Priyank, we'll let you go. I appreciate you joining us with your strategies. Let's chat about the agro space now, where the Guar